Hi everyone, great to be at TechChill. It's my first year, so really delighted to be part of the conference. I'm a partner at 8 Roads, and the topic today is how to scale out of Europe. Before jumping in, I thought I would give a second about myself and 8 Roads. We're a global venture capital firm, so we have offices in the US, in Asia, and in Europe. In Europe, the whole team is based in London, but we cover the whole region, and we've been quite active all across the different countries. And as you can see, we have 6 billion under management and very diverse portfolio. We tend to invest at the scale-up stage. So scale-up is basically what we call like companies that have already product market fit, they have something working, and they really want help to either grow internationally, scale their team. So to give you a sense, we invest anywhere between 10 and 30 million into companies, and we dedicate a lot of resources to help the companies scale, especially out of their initial geography. And just a second on our portfolio. So we're active all across sectors. We have a number of investments in the consumer space. You can see both marketplaces like Wallapop or Treatwell, but also brands and gaming companies like InnoGames. We've been very active in the enterprise space. You have a couple of database company like Neo4j out of the Nordics, which is a great story. And a couple of marketing software, HR tech, application software. Fintech is a big area. Recently invested in Spendesk, for example, out of France. And finally, the last one is healthcare, IT, and services. And some of those names like Okin or Oviva are great stories of companies in the space scaling out of Europe. But the topic today, I thought would be good to spend time on how to scale out of Europe. I'll spend time on two topics. So the first one is giving you a little bit of data around where we are, how is the market in Europe, and there are a lot of good news. And the second part of the presentation is more around what does it take. So how do we go, and what can we learn from some of those great companies that we've seen becoming global iconic tech companies out of Europe. So forgive me, there's a little bit of data in this section, but I thought it would be helpful to look at the numbers a little bit. And a lot of good news. So we're at all-time high on a number of those aspects. This is showing you the European deployment of venture capital across the years, and it's pretty fascinating because if you look at 2020, which obviously has been a COVID-19 pandemic, we're still seeing record level of money deployed into European VC, which is I think a very healthy sign of the ecosystem. And this is showing you actually the amounts of fund raised by VC funds. And equally interesting, 2020 has been a record year, which means those numbers are probably going to continue growing because all those funds have been raised in 2020. And again, that's great news for all the entrepreneurs out there because more money for the ecosystem is obviously a great thing. And when you look at a European tech ecosystem, one question or one remark a lot of people were saying back in the years, and I've been in this industry for 10 years, was always to say there hasn't been a lot of exits in Europe, and that's clearly changing. And I think that's always a great thing for a number of reasons. So first of all, when you're a venture capital fund, you raise money from external LPs, and as you know, you need to give that money back at some point. So seeing exits is always a great sign for the limited partners investing in venture funds. But there are also a number of good reasons why exits are good. It means, the angel investors are getting their money back and they can reinvest in the ecosystem. And it also means you will have a number of repeat entrepreneurs that hopefully go and start new companies and bring that knowledge and that experience of having scaled their businesses back into the ecosystem. And I think, that slide is particularly interesting because you can also see the increased number of IPOs, which was also another weakness of Europe if you compare to the US for many years. I won't say it's perfect yet. It's still a very a difficult road for businesses to IPO, but clearly this year in particular, we've seen a number of interesting IPOs recently. I'm thinking Darktrace, the Hut Group, Deliveroo in London, and that opens hopefully the way for more to come. And that's probably the most exciting slide, is not only we're seeing exits, but we're seeing sizable exits. And this chart is showing you the European companies that are valued more than 5 billion. And that's a fascinating slide, because even if you look, probably 5 years ago, there would have been a handful of companies on this list. And, it's really fantastic to watch companies like Adyen, 74 billion, Spotify, 50 billion. So not only we're creating large companies out of Europe, but, we're talking in the multi-billion valuations, and obviously the next mark would be to have one above the 100 billion. But it's a very encouraging sign to see how sizable those companies can become. And the final one on that section that I wanted to go, and again, there are a lot of numbers, but let me explain a little bit, is trying to understand the fundamentals behind that growth. And that's actually a research that we've done ourselves when we were looking at the opportunity in Europe, and we were trying to compare ourselves to the US. And so when you look at the first on the left is the population. So Europe is 2.3 times the US. I think those numbers include Israel, by the way. 2018, you see we're a bit above in terms of number of companies created. So that's the healthy sign. And another great data is in terms of developers, there are actually much more in Europe than in the US. Unfortunately, when you look at VC investment, we're still a third of the US. And if you look at the market cap of the top 5 tech companies in Europe, they're less than 1% of the US. So, I think that slide is to show there are very strong fundamentals for the region. And there is no reason why those two numbers on the right wouldn't start to converge, because we have a lot of good basis. And obviously I won't come back to some of the things you already know in terms of quality of education, quality of the developers and the talent, but there are a lot of good reasons and fundamentals for Europe to keep on growing. So fundamentally at 8Roads, and I think a lot of investors share that with us, is we're very optimistic about what's to come for the region. And I just wanted to share a couple of the trends we're seeing in the market, or at least that get us excited here at 8Roads, and what we think would be great areas of growth in the future. I'm sure there are a lot more, but those are some of the areas where we're spending time. Number one is future of work, and clearly, COVID has been a catalyst for this in terms of discovering or improving remote working. But in general, that's a trend we've been observing for a little while, is to see the importance of employee well-being, to see the importance of attracting and retaining the best talent in companies. And I strongly believe this is just the beginning. So I think there are a number of interesting areas within the future of work around culture and employee well-being, around the way to work together, productivity tools, around enabling remote work. And so that remains a very interesting area for us. The second one, which is also a mega trend, is sustainability. We've made a couple of investments in the space. We have a couple of brands that are purely sustainable. We also have a renewable energy provider in Norway called Tiber. And that's a mega trend we see in the next decades, I would say, especially on consumer side, where we see consumer behaving differently, and that becomes a very important way of consuming. But frankly, in all the different areas, so we see more like fintech, for example, like sustainable neobanks, sustainable investing. So I think it's a great trend to watch. The third one I put on this slide is low code, no code. So again, I think a lot of you will be familiar with this, but it's effectively what we can call like the citizen developer, which means we believe in the future that you won't necessarily need to be a coder or developer to develop those applications. And so there are already a lot of interesting companies in the space, but I truly think we're going to see that in every single vertical. So, as you can imagine, like marketing tech, hotel tech, I imagine like core banking, you're going to see more and more of those applications instead of being very complex and only reserved to developers. You're going to see effectively operators that will be able to drag and drop and build their own tools in the future. I'll keep going quickly on the other ones. So digital health, I think that's an obvious one. We've seen the rise of telemedicine, especially during the pandemic. But I think there are a lot of interesting things around digital treatments. We see also a lot about mindfulness and well-being. I mentioned a little bit through the employee landscape, but also on the consumer side. So that's I think a big trend here to stay. Number 5, security for modern tech stacks. That's really the continuation of what's been happening in the cyberspace. So if you can imagine, cyber effectively being how to equip companies to best, protect themselves. Obviously, the more like the tech stacks change and are in the cloud, the more the security stack changes itself. So we see a lot of opportunities there as well. And number 6, embedded finance, embedded insurance. That's a theme I like a lot. And I'm sure, again, some of you will be familiar with it. But that's effectively to say, in the future, all companies will be fintechs, or all companies will be insurtechs, and more and more companies will be willing to offer payment services, banking services, insurance services as part of their offering. And so, the implication of that is that I think we're going to see a lot of enablers, so effectively providers of insurance products or banking products that will enable others to offer that to their consumers. So that's another area where we're fairly enthusiastic about what's to come. So I'll pause for a second and now switch into the second topic of the discussion, which is really, so what does it take to scale out of Europe? Like, what can we learn from some of those great stories? And we spoke a lot about the great fundamentals of the regions. We spoke a lot about the increasing VC money going into companies. But what are the bottlenecks? How come we don't see more of those unicorns being created? And some are obvious ones. So the first one is really fragmentation. I don't have to explain that, but Europe is a collection of fragmented countries, regulations, languages, habits, which make it pretty difficult for a company to be born somewhere and to scale into the region. It also makes it difficult to find talent, makes it difficult to create those ecosystems where you can learn. And that's always, I think, what we've been hearing, that in the Valley, you can always find someone who has, encountered the same problem as you do. Like, you want to share best practices between chief product officers or chief people officers. And obviously in Europe, it's much harder because those ecosystems are quite geographically spread. The second one is funding, and I think we've seen it earlier, but effectively the VC investment is still a fraction of what it is in North America, and I still believe obviously funding is a big component for success. So hopefully we keep seeing those numbers rising. Exits, again, we talked about it. I think it's been improving, but it would be great to see more exits, and in particular public listings. Because that provides good liquidity in the ecosystem, and today it's still a difficult task to go an IPO in Europe. And finally, the last one is bureaucracy, which is a little bit linked to the fragmentation, but visas, borders, taxes, and regulation remain too often a barrier for growth, unfortunately. So I thought I would look at a couple of great success stories out of Europe and try to see what did they do well. The reason I picked those two, I think, is because they are the two fastest unicorns, or at least the recent companies that went the quickest from being created to become unicorns. One of them is in our portfolio, Kazoo, which is an online retailer of used cars, and Hopin is a B2B company providing event software. And I try to reflect a little bit to think what can we learn from those examples. And so those are just a couple of thoughts from me. I'm sure there are other takeaways, but the first one is very large markets. I think it sounds like an obvious thing to say, and especially for a VC, like to go after a large market, but it remains very important. So if you want to build a very large company, you need to address a very large problem or address a very large market. And if you take Hopin or if you take Kazoo, those are massive markets. And Kazoo, interestingly enough, is only in the UK for now, and is still addressing a multi-billion-dollar market. And that's also a good component to create a unicorn is to go after a large problem. The second thing, which is not talked enough about, I think, is velocity. And when I reflect a little bit on our portfolio around oftentimes, like, people ask me, what are the characteristics of great founders? Like, people ask me, like, is it education? Is it their upbringing? And usually the answer I give is to say it's actually velocity of execution. And what I observed, especially when you look at those companies like Hopin and Kazoo, incredible velocity of action. So, and what I mean by velocity could be hiring, could be acquiring customers, could be opening offices, iterating, trying things at a speed that is just like 10x what the next company would do. And I continue to think that's a big reason why those companies have done so well. The third one is capital, and I put like amount and quality. I think being able to fundraise is important, and being able to find good investors. And I think in both those cases, I think those companies raised a lot, but they also raised from top tier investors. And clearly, that's a great virtuous circle, because you get good investors, which means you can hire better people, which means you can keep on growing and execute at pace, and then you attract the next great investors to your cap table. So I truly think that matters. Top talent, that's another one where it sounds obvious, but time and time again, like, going for the very best people will make the difference. Obsessive about customer experience. That's another thing. When I was watching videos of Hopin at the beginning and Kazoo at the beginning, I think one thing they have in common is those markets were not greenfield at all when you think about it. So obviously buying second-hand cars in the UK is already a busy market. And if you think about Hopin, like, virtual events existed way before Hopin. And so I was reflecting, like, what did they do differently? And I think they really came at it thinking, I'm going to redefine the experience of that space. I'm just going to change, and I'm going to be obsessive about the customer experience. And Kazoo obviously had these famous stories where they would deliver the car in front of your house with a big bow. So really changing what it means to buy a car online. And equally, Hopin, if you've been to some of those virtual events before, like, they were pretty clunky, and I think they really changed what it meant to go on an online event. So that's an interesting takeaway. Those companies have been really obsessive about the experience. International, I said not always. So you have some examples of companies becoming unicorns in one country. So that's why I don't want to make generalization. But oftentimes, or more often than not, going international early is a key factor of success. So something to definitely consider. And the last one is M&A. And I thought that was interesting to point out, because it's not something I see a lot of founders doing. And actually, if you look at those two companies, they've been very active doing acquisitions pretty early in their journey. And I think that's something that often founders find, scary and difficult to execute, but it could also be a great way to scale. And so that's why I thought it would be interesting to highlight that both of them have been quite active in making acquisitions. So yeah, those are kind of my thoughts around what does it take to scale fast, and a couple of examples from great iconic companies being built in the recent years. And to finish with, obviously wanted to highlight how excited we are about the Baltics. I think a lot of the conversation at TechChill is going to be about how well the region has been going, and obviously Vinted recent raise has been fascinating. We've been very active in the region, so we're in the process of closing a very large Series A in the region, and very excited about the prospects of the company. And I can't wait to see more companies coming from the region. So here are my details in case anyone wants to reach out directly. Otherwise, it was great to have you today.